Welcome to Equal Ground Headlines. I'm Samuel B. Williams, bringing you balanced coverage on our top stories of the day. Washington, D.C., U.S. financial markets plunged on Monday amid an escalating trade showdown with China, prompting calls for calm from the White House. The S&P 500 fell 2.6% by the closing bell, sinking the index to 16% below its record high from 2 months ago. The Dow Jones Industrial Average plummeted roughly 1,000 points, while the tech-heavy Nasdaq Composite sank nearly 2.9%. The dollar also slid in value as investors pulled back from U.S. assets, with the 10-year Treasury yield briefly spiking above 4.4% before easing. At issue are the intensifying trade tensions between the United States and China. Beijing has bristled at President Donald Trump's hardline stance on trade and tariffs. Investors are reportedly jittery over a potential trade war after President Trump criticized the Federal Reserve and doubled down on new tariffs last week. The administration's America First trade policy, aimed at pressuring China to end unfair practices, has led to short-term volatility. White House economic advisor Larry Kudlow downplayed the market turmoil as growing pains in an effort to secure better trade terms. This is a temporary correction, a White House statement read, emphasizing the administration's view that decoupling from China will strengthen the U.S. economy in the long run. Officials pointed to robust job growth and the promise of new manufacturing investment as signs that the fundamentals remain strong, urging Americans not to panic over daily market swings. Still, Monday's sell-off underscored investor anxieties. Big tech stocks led the decline ahead of earnings reports this week from major firms like Tesla. Analysts say tech companies are caught in the crossfire of U.S.-China tensions, facing potential supply chain disruptions and higher costs for components. One immediate source of unease was China's threat of retaliatory sanctions on U.S. businesses, announced over the weekend in response to Washington's stance on Hong Kong. This tit-for-tat has raised fears of a broader economic rift between the world's two largest enemies. On Capitol Hill, Republican lawmakers backed President Trump's tough approach. Senate Majority Leader Mitch McConnell argued the market slump was a small price to pay to hold Beijing accountable for years of trade abuses, adding that past administrations appeased China at the expense of American jobs. Conservative economists echoed that sentiment, noting that U.S. tariffs have brought China to the negotiating table in prior disputes. They remain confident that American resilience will outlast short-term market dips, especially if China's economy also feels the pain of decoupling. In contrast, Democrats warned the administration against using markets as a bargaining chip. They pointed out that ordinary Americans' 401k retirement accounts are directly hit by these declines. People's livelihoods shouldn't be collateral damage in a trade war, said House Minority Leader Hakeem Jeffries, who called for more coordinated international pressure on China rather than unilateral tariffs. Financial experts are divided. Some believe the sell-off is overdone, noting that corporate earnings, outside of trade-exposed sectors, remain solid. Others caution that continued uncertainty could tip the economy toward a downturn, especially if investor confidence erodes further. Wall Street strategists have urged clarity from the Federal Reserve as well. The Fed has faced unprecedented public criticism from President Trump, who insists on lower interest rates to stimulate growth. Fed officials have so far stood their ground, seeking to curb inflation even as political pressure mounts. Monday's turmoil comes as global investors are also reassessing their portfolios. The U.S. isn't the only market under pressure, but it's been among the hardest hit due to the high stakes of the trade impasse. Some fund managers have started shifting capital to European and emerging markets, perceiving them as relatively insulated from U.S.-China tensions. This capital flight contributed to the dollar's weakness on Monday. Despite the market jitters, the Trump administration projects confidence. Commerce Secretary Wilbur Ross noted that the trade negotiations are ongoing and hinted at possible win-win agreements in the coming weeks. "We ask the American people to hang tight," Ross said. "Our end goal is a fair trade deal that brings jobs back home and protects our intellectual property. That will be a game changer for growth. Until then, U.S. officials are preparing contingency plans to support key industries, including aid packages for farmers and manufacturers hit by Chinese counter-tariffs. Market watchers will be closely monitoring any diplomatic signals or tweets from President Trump that could sway sentiment. For now, volatility is the new normal on Wall Street, but supporters of the administration's stance believe the U.S. economy will emerge stronger once the showdown with China yields results. As one conservative commentator put it, "Short-term pain, long-term gain. That's the price of putting America first."